Monday, September 2nd, 2024, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at commodities. Commodities are the most undervalued versus the stock market in 124 years, and yet they're still in the boom market. If you look at the 2020 bottom as the bottom, the only thing that's happened has been a consolidation ever since the central banks, Fed included, started raising rates in early 2022. So we're going to look at that. And I've got a commodities playlist, the secular commodities bull market that I've been calling ever since 2019. And why have I been calling for that? Well, because the last commodities bull market started around the turn of the century and ran up until 2011. So it's a cyclical thing for commodities, even though right now commodities look really undervalued. We're also going to look at gold and silver and how they're related to the general commodities. And you'll find it very interesting to know what gold and silver do when commodities finally start picking up relative to financial assets. And it's with that in mind that I wanted to let you know, if you haven't done it yet, and this is not advice, but it's something that I've been doing, and people on the channel have asked me where can they get gold and silver. So I'd like to give a shout out to Miles Franklin, my U.S. affiliate for precious metals. They've got a few specials going on. I think they end today, September 2nd. You can get 1 ounce gold Krugerrands for only $60 over spot, which yes, it's a little less than 3%. So the premiums are relatively low right now, and you can also get 1 ounce silver Austrian Philharmonics, only $3.10 over the spot price. For my UK viewers, of course, gold investments, they always have some kind of specials going on, and you can check them below in the description of this video. If you want to get in contact with Miles Franklin as well, all the details are below in the description. And I think you'll be surprised to see what gold and silver do when commodities finally start moving higher relative to the stock market. And that's even after, I would say, gold and silver being up about 20% this year. There's still a lot of upside potential. That's my opinion. It's almost like we are at a bottom here, even though we're making new highs in gold. Yes, silver still hasn't made new highs, historical new highs, but I think it's only a matter of time. So I saw this post on Twitter or on X the other day. It's from someone called Josh Young. He's a contrarian value investor. He's been seen on CNBC, Bloomberg, Fox, and Wall Street Journal, Forbes. He's got a lot of followers, almost 100,000. And he posted this chart here. And he said, today commodities are as undervalued relative to common equities as they have ever been. All signs point to early stages of a prolonged commodity bull market, likely stretching into the 2030s. And I agree with him. And you can see here on this chart that there was a bottom in this ratio, commodities versus the Dow, back in 2020. And it's pretty much around the time that I was saying we will probably see a secular bull market. And why did I think that would happen? Well, because commodities had been very much sold off since 2011 versus financial assets. I also expected interest rates, not just the short-term interest rates, but bond yields to bottom and start going up. I expected the end of the bond bubble that we saw from basically 1981 up until 2021, a 40-year bond bull market. Yes, rates and yields might come down a bit here as we go forward, as the Fed cuts rates, as the economy probably goes into a slowdown or recession, and then the Fed has to pump probably more funny money in terms of QE into the system. But I think the bond bull market, where rates went from above 15% in the 10-year in 1981 to like 0.3 in 2020, that's over. And now the tendency is for bond yields to go up over time. Yes, they can come down in counter trend drops in yields and counter trend rallies in bond prices. And I think that's going to help commodities even more. So as you can see from this chart, this relative value chart, the commodities have come off since 2022, mainly because of this. And there's another analyst here, Hartnett, and I took this from Zero Hedge, and it's just come out as well. Hartnett, the commodity bull market is just getting started. He's an analyst for one of the big Wall Street banks, I think Bank of America. And one thing he noted is that ever since 2022, when the Fed raised rates from almost zero to where they're now above 5%, that's when the general commodities have been sailing against the wind. They had plain sailing from 2020 until 2022. And with all the forecasts and the expectations that the Fed's going to start cutting aggressively over the next 12 months, yeah, this is what he sees as well. He sees commodities doing well. And he also looked at China and the fact that China consumer confidence is really down in the doldrums. It could take only a little spark to get things going again in China, and that's a big part of commodities as well. And the reason commodities do well in dollars is that when the Fed loosens monetary policy, it makes the dollar worth less. And if the dollar is worth less, you will need more dollars to buy real things. So let's go back to that commodities to Dow Jones ratio chart, because I wanted to talk about gold. And as you can see here, we can go back to the Great Depression, and commodities were really undervalued versus the Dow. But look at how even during the Great Depression, there was a commodities bull market, and gold went from $20.67 an ounce to 35, even though gold wasn't traded because gold was money. But that's what happened there during the Great Depression. In the 1960s as well, we saw that commodities underperformed the Dow. They're quite low. At that time, it was a historic low going back to 1900. And then they started picking up again in the 70s. And there was a correction in the mid-70s. You can probably say that was like the second wave of inflation came off a bit. And then we had the culmination in 1980, 81, when gold and silver made new all-time highs. And the last big bull market, as you can see here, was in the beginning of this century. I think it started out 2001 or 2. And gold and silver, by the way, bottomed around the beginning of the century. Gold had like a double bottom in 1999 and 2001. And commodities had a first leg here up to 2008. We had the crash of 2008, of course, and commodities came off. And then we had more QE and we went up again, as you can see, versus the Dow. And ever since then, it's commodities have underperformed financial assets, the Dow, the NASDAQ, everything. And it's interesting that the blip or the move higher in commodities we had in 2020 relative to the Dow is very small. And the correction has been really small as well. So there's a lot of potential because it should get back above that one line and most probably go up to that 3.5 or so line. And notice that we had gold bottoms as well in the early 70s and in the early 2000s. And it's really interesting that gold and silver are up this year. Gold is making all-time highs every week as we speak. And commodities haven't even started going up relative to the Dow. And that's why I'm not getting rid of my physical gold and silver, nor my miners, because I think there's still a lot of room and potential for commodities and gold and silver as well. And in the 70s, gold and silver outperformed actually the general commodities. So I think it's an explosive setup, not just for commodities in general relative to the stock market, but also for gold and silver. Even though you hear a lot of people saying you shouldn't buy gold now because it's at an all-time high. I don't agree. And again, this is not financial advice. This is just my opinion on things. Let's have a look at where the markets are this morning. Yeah, it will be a quiet day in the markets. The U.S. is shut today for Labor Day. I'd like to wish my viewers in the U.S. a happy Labor Day. Yeah, it's almost 8:30 a.m. London time. So we've got spot gold at $24.98. It's down about $5. The high's been 05 and the low has been 24.89. So pretty steady right now. On Friday, gold closed around 25.03 or 04. That's the highest closing ever on a monthly basis. It wasn't the highest weekly close. Spot silver right now is at 28.42. It's down 43 cents. Yes, silver is having a tough time breaking through that 30 level, but we're still up 19% year on year, and silver gets dragged down a little bit by the general commodities. Yes, I still view it as a monetary commodity as well, but it's not as much of a monetary commodity as gold. And I think gold and silver are just like in 2020, they're forecasting a big move in commodities because, yes, gold and silver got hit hard in 2020, but they started moving up a lot quicker than the general commodities did, and then general commodities caught up. The Dow futures is down 120 points this morning. The NASDAQ 100 futures is down 89, and the S&P is down 20 points. The currency markets are really steady, so I won't go over the pairs in the FX market. We're seeing crude oil come off here. WTI is down 0.5%, 72.87, and Brent crude is down 0.5% as well at 76.50. High-grade copper down 0.2% at 4.18. That 4 level is a really important support for copper. And what about the U.S. Treasury market? Well, it's shut today. It's not trading around the world because it's a public holiday. But one thing I noticed is that the spread, let's have a look here, between the 2-year and the 10-year yield, that's almost back to zero after being inverted for, I think, almost 2 years. So on Friday, the 10-year closed around 3.93%, and the 2-year around 3.92. So only 1 basis point inverted. I think it's only a matter of time that it uninverts and goes positive again as the central bank, the Fed, starts cutting rates. And talking about cutting rates and the economy, the most important statistic this week, not that we should really trust it 100%, but it will give the markets a big signal, is the U.S. jobs data or non-farm payroll on Friday, September 6th. So we're going to keep an eye on that. And with that, I'm going to wish you all a very good day. Take care. Bye.